Good morning, traders. It's 8 a.m. Chicago time and 9 a.m. Eastern on Monday, the 28th of August, 2017. Thanks for coming back, rejoining me after a brief 10-day break. Feeling refreshed, relaxed, and back in the markets here. I arrived very late last night. I returned home very late last night. Flight was delayed due to the hurricane, and didn't have a chance to go through a full assessment of the market over the last couple of weeks. So I'm going to keep this brief as I can, because I don't want to share anything that may be misleading, as I haven't done my full homework yet. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The markets are still hammering away at the U.S. dollar, pushing the euro higher, which of course is causing is part of what's causing the European stock markets to get hit a little bit, as their currency becomes more expensive. The euro is leading the pack this morning. Euro September contracts trading at 119.48, up 55 pips or 0.46%. It got as high as 119.73 this morning. Gold also higher, 1303, $1,303.60 for gold, up 5.7 and 0.44. Crude oil is the laggard this morning. Crude oil, October crude is trading at 47.51, down 36 cents or 0.77%. I'm reading a lot about how Hurricane Harvey um, is causing oil prices to surge, but I just cannot reconcile that with um, with the chart. The chart shows that the market's been trading, unless there's something wrong with my charts here while I was gone, but the markets have been trading since I left at a high of 48.50 and a low of 47.06, and we're trading 47.50. To me, crude is completely sideways currently. I'm not seeing a surge. Now, gasoline prices, since a lot of refining is done in the Houston area, gasoline prices, I haven't looked at RBOB. RBOB may be rising, but I think crude oil prices have been pretty steady so far, given this massive hurricane that's going on. Um, so those are the leaders and laggards. Uh, Overall, the S&P 500 is up 4.75 points, trading at 2447.50, up 0.2%. What's in the news? Mainly this hurricane going through Texas. Also, nothing else that's really affecting us. The news about Uber and other things, politics as well. Lots and lots and lots of political news. Not worth mentioning here. It doesn't affect our information flow and needs and impact on the market. Given that it's Monday, I'd like to quickly cover uh, the uh, the expectations for the week. This week, today, starting with today, we got advanced goods trade balance and wholesale inventories this morning, and nothing else is expected for the rest of the day. Looking for on Tuesday, looking for GFK, German GFK, UK nationwide housing, and then US case Schiller consumer confidence tomorrow. Wednesday, we get ADP, core PCE, and GDP. The UK, we get M4 money supply, Eurozone consumer confidence, and we get Fed's Powell. Thursday, we get the German retail sales and unemployment, Eurozone CPI and unemployment, U.S. jobless claims, PCE, personal income, Chicago PMI. Thursday's pretty busy. Of course, Wednesday we have the crude oil inventories as well, which will be interesting given this hurricane situation. And on Friday's a big day this week. We have non-farm payrolls and unemployment, manufacturing PMI and ISM. German Eurozone and UK PMI manufacturing and ESB's Nowotny. So this week we have a steady stream on a daily basis of economic releases, whether in Europe or in the US, with Friday being the icing on the cake with the non-farm payrolls. Now, non-farm payrolls, last month, non-farm payrolls was on August 4th. The SOC for non-farm payrolls was 2473.75 in the ES, with the high of 2477. Pretty poor move. It went up 3 points, 3 points on a pretty good number, and then put in a low at 24.74 after the number was released. So traded a 3 point range on that day, which is a lot higher than where we are now. But it's nothing to get too excited about these days. It just isn't a big mover. So that's non-farm payrolls. Let's switch gears here. I'm not going to review. Not going to review what happened over the last or the last trader bite. It makes no sense. It's been so long ago. But I will review what has happened over the last couple of weeks by starting out on the weekly. Last week's weekly has been pretty interesting. Good distribution on the markets on the weekly. Pretty good distribution. The week before that, the week I took off, was very, very, very indicative of a large move coming, which occurred. It closed this week, the week of the starting with the 14th. It closed in the 2464, and then it ended up opening down in the 2440s with a big gap beneath. And then last week you had some pretty good range, pretty good distribution. I mean, pretty good range is a relative thing. You had about 21 points of range, which actually is pretty poor historically for this product. Generally, this product will trade around. I think the last time I did the stat was somewhere around 50 points per week. But since last summer, or early summer, around June, July, we started to see those weekly ranges compressing. And so there's a lot of quiet trading that's been going on. But look at this distribution from the week prior. This is what we call compression or balance. And this balance is coming to a head. You could see the beautiful kurtosis here. I know I sound like a nerd here talking statistics, but the market traded in such a tight range and formed this incredibly good-looking curve with a tail on it, and it shows us the market's really ready for a move out of there. So, and it did, and it ended up moving down here. And then this last week we had pretty good market discovery throughout the week. We have a lower high, lower low of the last few weeks, right? We haven't been down to the 24.32. Remember, 24.35.50 is a key area, or 24.35 quarter is a big key area that we tested back here. We got pretty close and couldn't get to it. Bounce back up, and then we're back here again. This looks kind of weak to me. We're pushing into the gap zone that we left behind from early July. We've pushed into the gap zone. I don't think we've hit the mid yet, according to the chart that I looked at. But overall, it looks like it's ready to make a move. Here's where we are on the 15-minute. I know this looks noisy. Let's get rid of this. This looks pretty noisy with all the lines and stuff, but it's telling me a lot. So here's the gap down. Wait, am I missing information? Yes, I'm missing information. It looks like that's what it is. I'm missing information. It's unfortunate that happens. So again, I didn't prepare very well, but figured I'd do a trader bite this morning and get warmed up for the week. Here's last week. There's the action last week. The point of control last week is 24.4275. The market's currently trading 24.4775. It looks to me like the market has a base underneath it It has a base, a pretty good base underneath it. It looks like the market has tested down, has reattempted, and is basing. So if I look at the daily, well, let's not use my flex chart because it might be too noisy for most. Here's the daily chart just to keep things clean. Let's switch this to 67%. Okay, so here's the daily chart, and here's what's happened over the last week or so. Again, I need to bring in these bars, so this information is not very clean. But what we've gotten is a push down, push up, continuation. So the low was taken. The prior low got right into this point of control that I pointed out, 35. 24, 35, 25 is the level, missed it by 2 ticks, and then it made a lower high. Look at where the high is. The high is the point of control of the balance up top before the North Korean news, nuclear news, and made a lower low. This is a classic test formation, okay? And what it looks like it's doing is it's putting in a higher low right there, and it's likely to test higher going forward. And that's my key hypothesis for today, is that we're likely to uh, find a base today. It is Monday. It's expected to be quiet. My expectation is we would likely find a base today and start shifting up. So let's do the expectations for the day. This morning, we're opening inside of Friday's action. We're outside of value in range. I'm expecting it to have a small burst of selling into the open. Friday had some pretty good selling into the close. You could see the delta there. Pretty good sell delta. I expect the market to rebalance that a little bit, and then I expect it to start basing, and then the key move is likely to be up to start testing that 24.53 from where we are now, which is only 5 points. I don't have high expectations for today as far as range and where we would end up. Clearly, the next big target up is that 63.50, pending this data being pulled in. I need to reassess the plan as I'm missing data, as I said. So that's the primary hypothesis here. I'm not expecting it to go much further than 24.55 today. And that gives us about 7 points of range, which is about as much as I would expect. Secondary hypothesis, open auction, test up, have an impulse down, bring us back into balance here over the last week, down in the 24.42.75, 24.43 right here. That's 24.43. Okay. And then base, and then just go sideways into the session and potentially run up into the close. That's hypo 2 for today. I'm not expecting a trend day. The market's been in balance as outlined by this box right here. I expect that to continue with a likely move tomorrow. Again, the week is loaded with data, and so we're likely to get some volatility this week. But in last week, you did some pretty good exploration up and down, which I wasn't here for, but there was some pretty decent range last week, and you did some testing up and down. But we're likely to break away from this range this week. But I'm expecting it to go to the upside, despite what all the gurus say. I'm reading what's on the chart, and what's on the chart is that we did the extension, we pulled back for a correction, and we're likely to push up. But I will change my mind if the market fails below this 24.43 area and starts to make weak runs. Like the other scenario is, let's say it gets below this point of control. Well, that's important information. If it gets below the point of control and makes weak tries higher, and it seems like the better rotations are down, then I'm happy to go and test 24.32.75. Remember, the 24.35.50 is important. 24.35 quarter is important. But then I would love to see it go and start testing below here the gap zone, the gap mid at 31, and then start to move to 24.27. I'm not going to put that in as a scenario, but I'm just simply saying, demonstrating that even though I'm expecting this to go sideways with an upward skew, if it decides to puke or to turn lower, I'm okay with that as well. You just have to be flexible as a trader for whatever happens next. Okay. So those are the key ideas. Thanks for joining me again, and we'll resume our regularly scheduled programming of the Trader Bite at 8 a.m. Chicago time, 9 a.m. Eastern, every morning going forward. I will not be here Friday, and Monday is Labor Day here in the U.S. next Monday, so just a heads up. Okay. Good luck today. Watch your risk. Be a trader, not a gambler, and enjoy your trading. Take care.